So, Nancy, we were just talking about it there. Small caps outperforming the other indices for Q3. A lot of that is based on rate cuts, the expectation of rate cuts, and then actually getting them maybe 50 basis points being even more than people originally thought. I want to ask you, do small caps have more room to run? Now that we've gotten the rate cuts, is everything priced in or is there just more there?
Absolutely not. We think this is really the beginning of what could be a multi-year bull cycle for small cap stocks. We know that the small cap sector is significantly underowned in the market. It is at record lows as a percentage of the total equity market at a little under 5%. We know that valuations are incredibly attractive. They remain much lower on small cap stocks as well as on the smaller cap sectors of the S&P 500 than the larger cap counterparts. But that is not, those are all necessary conditions, but they're not sufficient. What we've needed to turn this around and to really get small cap stocks moving is not only rate cuts, but it is the confidence that we will be able to navigate a soft landing rather than a recession. And finally, most importantly, relative earnings growth. And what we're starting to see for the first time in a couple of years is that relative earnings growth for the small cap sector is expanding. And the expectation is that by the end of the year, small caps will be growing faster than large caps.
All right, so Nancy, I have to say, that was a long list of things that need to happen in your thesis to make the small caps work, in all fairness. I want to get to that earnings thesis. So I'm looking at just the overall market, the S&P. The earnings estimates for the S&P are 13% in Q4, 15% for 2025. So I know you say that they're going to outpace their large cap counterparts. This is just the market. So you're telling me that small caps are going to post better than 13% earnings in Q4 and then in 2025 better than 15% earnings, even as you just hit on the fact that the economy is slowing down a bit?
Well, the economy is slowing a little bit, but it's still very strong. And small cap stocks are big beneficiaries of many of the secular growth themes that the large cap stocks are trading on. We think that for small caps, what's really important is to be a stock picker in that marketplace. The overall indices may not outpace, but we think that there are many, many small cap stocks out there that will be showing 15 to 20% earnings growth next year, so much greater than the benchmark. We also suspect that, like most years, those numbers on the S&P are going to start out high and come down, and that the ultimate rate of earnings growth in the S&P 500 will be less than 15% next year.
Okay. You also say that you have some picks for us, actually. You gave us a couple of names that are tied to, infrastructure spending and also nearshoring. One of them is Arcosa. The other one's Clean Harbor. They've had some big moves in Q3. So I want to ask you, don't we already know all that? I mean, isn't all that already priced into a lot of these names? And the rate cut maybe accelerated a bit, but is there going to be another bill that's going to fuel this stock to another 13% rise next quarter? Is there going to be another bill that's going to move Clean Harbors to another double-digit rise in the next quarter? I mean, what happens? What is the catalyst?
So we're not expecting more bills to come out of Washington that will fuel this. What we do expect is that these companies will benefit both from the bills that have already been passed, where that money is just starting to get deployed, and also, particularly in the case of Arcosa, it's a picks and shovels play on the build out of the power sector, which is so incredibly important for the build out of AI, for the digitization of the country, for factory automation and other uses of big data. And so this is a way to benefit from the actual building that's being done to build the utilities, to build the transmission, to build the transportation, so that we can continue to see all the growth in AI that people are expecting.